I have to start by asking you, what is going on with the economy? There's been this big surge in tourism, and this is something that the exchange rate is being buffeted by. But what is driving this?
Yeah, what is driving this is that Iceland is being hit by one positive supply shock, if you like, after another. We have had this record growth in tourism, 40% increase in tourists last year, coming on top of very big increases in the last few years. And this is coming into an economy that was, say, in 2015 already at full employment. We grew by 7% last year. And this putting a pressure on the economy, housing markets, labor market, and also on the exchange rate. And that is to be expected.
So what is going on then with the whole system of currency controls? You know, Iceland had a terrible currency crisis 10 years ago, got through it. You're on sound footing now. That's pretty clear. You started removing capital controls around October of last year, a couple of months ago, and we're actually just in March. You did the remainder of that, and meanwhile, the currency is skyrocketing. In fact, surging 4% against the euro, 6.5% against the dollar since March 31st. Why did you take the currency controls off, or why did Iceland do that? Was it a mistake?
No, it was not a mistake. And actually, the currency has not appreciated since we removed the controls. The bulk of the appreciation took place before. And that was part of the problem, really, because the currency was appreciating because of strong foreign currency inflows because of tourism. And we had a current account surplus, 8% of GDP last year. And that was why we were in an equal time in lifting capital controls on outflows, because we actually wanted more outflows. And the market has been much more stable in some senses then. The central bank is buying much less FX than it did, for instance, in the second half of last year. And so I am hoping we are going into a more balanced situation. And overall, it has gone very well. So stability in overall sense has been preserved through this process.
You even had some interest rate cuts, and for a while that didn't stop the krona from appreciating. As you say, it has stabilized, but certainly there's big questions about what this is going to mean for inflation, what it's going to mean for the economy. You have a policy meeting next week. What are you going to be debating on May 17th?
I'm not really able to talk about what we are going to do. I'm very close into my silence period, but what is important here is that the interest rate cuts that happened in the second half of last year were not targeting the exchange rate as such. They were done because we had great success with our monetary policy lately, because Iceland historically is an inflation-prone country. And even if inflation has been close to or below our target for 3 years, it is only in last summer that inflation expectations went to the target and have been there since. And we have come to the conclusion that we can keep the inflation target over the medium term with lower interest rates than were possible before. And it's quite possible that going forward we will be able to cut the nominal interest rate somewhat further, even if we need tight monetary policy in order to counter-react overheating risks in the Icelandic economy. I mean, that is what we are dealing with.
So the finance minister apparently has urged you to cut rates. And it sounds to me you're saying that at some point this is a possibility, that could make sense.
Yeah, I can't comment on that, whether that is at some point or now. We will wait and see. I mean, the committee sets monetary policy based on medium-term inflation prospects, and the exchange rate factors, of course, strongly into that, but not as a separate goal. So we will just have to see. Over time, I think that real exchange rates in Iceland will come down, and that will be reflected in short-term rates, because now we have a very high national savings rate, something like 29% of GDP. We have a current account surplus, and we have a positive net international investment position. We have more assets abroad than debts, and that is typical for economies like Switzerland and others, where then the real exchange rate starts to reflect that. But this is not something that happens overnight or immediately. And what happens next week, just you will have to wait and see.
Okay. Well, you're just creating all the more suspense. What about talk about changing the currency regime and having some kind of trading ban, having even perhaps a peg to the euro to keep it more stable, to maybe some people have complained about speculators in the krona. Are you in favor of changing the regime and maybe doing something where there's a little more control over the krona again?
We have to be clear that there is actually we are not in the mode of discussing that for an immediate decision. The government has set up a committee to look at all potential options. This is one of them. Another option is to keep the current system, which has been in some sense very successful, because inflation is at the target, inflation expectations at the target, and we are able to use interest rates to even out fluctuations in the real economy, and the fluctuations in the exchange rate lately are mostly benign. They are reflecting the fact that the equilibrium exchange rate has appreciated because of the good fortune that we have had, and we were just talking about. And history shows that it is difficult to maintain a peg if you have free capital movements. And when capital accounts were liberalized in the 1990s, many countries went from having a kind of a pegged exchange rate to more flexible exchange rates. And to keep a peg, you need a lot of discipline, both in your labor market and fiscal policy. Is Iceland ready for that? I'm not so sure. But it is one of the options. But for the time being, we are operating under the current system. And all policy decisions are based on the current system. Whether something will happen in the future remains to be seen.
So let's broaden this out and put you in the context of global central banks. On Bloomberg Television, we spoke earlier today to Axel Weber. You know, he was the head of the Bundesbank and a member of the ECB, European Central Bank. He expects that the ECB is going to announce a plan to taper by June and start doing that tapering by September. In a nutshell, a quick final question and answer, how will that affect Iceland, if at all?
Very well, because one of the problems that we are facing is that the interest rates that we need to stabilize the domestic economy are much higher than the interest rates in the rest of the world. And so we have a very big interest rate differential, and that is, of course, a target for capital inflows and carry trade and such like. We keep it at bay now with a special reserve requirement, but that is not something that we want to have forever. So I would welcome that very much.